pivots, so the whole thinking here is this, all right? Yesterday we covered, and I'd encourage you to go back and look at the Fibonacci / fractals / price action video. And the whole idea yesterday was using our trend definition that we talked about, how to define the trend with, in the context of the daily and the 4-hour and the hourly, and where we're going to get potential buy and sell zones from. And then, the next idea was that we use the various time frames to anticipate direction for that day, week, month, etc. And then what we do is we use our Fibonacci to work out where we're potentially going to buy, where we're potentially going to sell. All right? And one other tool that we have so obviously fibs are just part of it. Then we have visual support and resistance that we'll talk about tomorrow. And then we have pivot points. So all of these different layers, all of these different things are all, stuff that other people are going to be watching. So some people might only trade with pivots. Some might only trade with Fibonacci. Some might only trade with support and resistance. Some might only trade with moving averages. People might watch oscillators. I don't think, honestly, that it makes any difference whatsoever. All right, everybody... Price is going to, and this is just a little bit of a philosophical discussion, price is going to move the way it's going to move. All right? It's only the way that we choose to capture price that really matters. And what I mean by this is, the buffaloes are going to make their migration from one pasture to the next. Okay? Now, one pride of lions might hunt the buffaloes in a certain method, and the other pride of lions might hunt the buffaloes in a different method, but the buffaloes are still going to make their migration. All right, they're still going to cruise across the Serengeti, and the crocodiles are going to massacre them in the Nile River. But the bottom line is, the buffaloes are going to make their migration. All right, and the same thing applies to price, in that price is going to make its price movements for the day. So what people use to capture that price movement is an element of subjectivity and personal preference, frankly. And therefore, pivots are just another way of doing that. All right, I wouldn't say they're the way, but they're another way of doing it, and a well-recognized way of doing it. So what are pivot points? All right, let me drag this across here. Okay. So we use two sets of pivot points at FX Bootcamp. We use the weekly pivots, and we can also look at the monthly. I've just never really been able to contextually make the monthly work for me on a tradable basis. You can close below a monthly central pivot, but have breached it basically for 4 days straight, and then close below it at the end of the week, and it's going to look held. So it's just kind of tough to trade around as an exact level, where the daily and weekly pivots I've found are very tradable on an intraday and a swing basis, week in and week out. So, I won't tell you the specifics of pivot calculations. If you're interested in that, you can certainly just Google it. The bottom line is the central pivot is the high, the low, and the close for the day or the month previously. All right, now you're going to remember that because pivots are calculated based on the previous day, the previous week, the previous 4-hour candle, the previous month, is that the width of the pivot range is going to largely depend on the previous day's trading. So if the previous day's trading was, euro dollar daily range of 400 pips, the pivots for the next day are going to be just preposterously wide. If the previous day's range was 13 pips, the pivots are almost going to be so narrow that they're null and void. All right, so you got to be a little bit smart about that. Average day range for the euro should be around 120 pips or so. Therefore, you're going to have a normal pivot range for the next day, and there and thereabouts. So, you're going to have to adjust your pivot thinking accordingly. Okay, so pivot points. Pivots were designed to be very, very simple. All right, their origins came about in the commodity and futures pits. Basically when traders were shouting orders at each other, and clamoring over each other and spitting in each other's hair day in and day out. This chaos in the pit gave birth to a very simple way of keeping track of these things. And basically all traders wanted was a series of technical calculations that they could look down at very, very quickly and work out what is high and what is low in the market as it relates to the previous day, week, month, etc. And so it gave birth to pivot points. Alright, so, if shouting and screaming and bashing each other on the head, there you go, quickly flick down, look at your pivot point calculation and see, right, we are high or we are low as it relates to the previous range, then make a decision based on that. Now, have the commodity pits, most of them are gone. However, this methodology, those traders from the 70s are now hedge fund managers of today, and then this trading methodology has been handed down to more junior traders to more junior traders, and so sort of the art of pivot points has been filtered down, or at least that's my theory of it. All right, and I just see pivots work day in and day out, and there's just no convincing me otherwise that in conjunction with other things, pivots work. Now, I do not use pivots by themselves. I use pivot points in conjunction with other things as overlap means. All right, now, the most basic rule for pivots is as follows. When you are above your central pivot, which is, in this case, if we're looking at this euro dollar here, these are some daily pivots. When you are above your central pivot, which is this thick black line, you should look to buy, and when you're below the central, you look to sell it. Alright, so above it, look to buy it, below it, look to sell it, etc. Alright, so rule number one is above the central, look to buy. Below it, look to sell. Alright? Rule number two is more of a ratio rule. Okay, and these are just general rules with the use of pivots. Is that if you start the day at the central pivot and head down, the target for that day, so if you start the day, alright, so basic vocabulary here with pivots is you got your central pivot, then you've got your resistance 1 pivot, your resistance 2, and it goes up to R3, but this particular plotter only plots to R2. And then, said differently on the downside, you got your support 1 and your daily, these are daily pivots, and then your S2, which is your reversal pivot for the day. So R2 and S2 are sort of your typical lows and highs for that particular day. All right. Now, these pivots in between, the M4, M3, M2, M1, these are simply the midpoint pivots. So it's daily R1 plus daily R2 divided by 2 gives you M4. So it's the midpoint between these resistance pivots and the midpoint between these support pivots. All right, and the reason why I have M1 to S2 shadowed green and R2 to M4 shadowed red is that these are typically reversal levels for the day, as you can see here. And here, we came up to those levels and then bounced off them. Alright, so they are your typical reversal levels for the day, and you can see just previously here, going back historically, how that range proved to be the high, how this range proved to be the low, how that pivot range proved to be the high, again here on the bottom side, again here on the top side. So you can just see, just very quickly and visually how those reversal areas or pivot extremes proved to be the high and the low of the market. Alright, now like I was saying before, we have a couple of general pivot ratios that we look at. Alright, one of them is as follows. If you start the day at the central pivot and head down, your target is going to be S2. Alright, so central pivot to S2. And if you start the day at the central pivot and head up, you guessed it, R2 is your target for that day. Alright, so said differently, if you start the day at M3, and you're going to need to do a little bit of research for yourself in these pivots. I'm not going to, you know, you're going to have to Google a few things. David at fxbootcamp.com if you want a copy of the MT4 plotter. It's not something I designed. It was designed by a bootcamp some time ago, and it's not something I support, but I'm more than happy to distribute the plotter for MT4. You know, okay, going back to our ratios, M3, you know, if we start the day at M3 and head down, then you're looking for M1 as a target, at M2 to M4. If you start the day at R1 and head down, you're looking for S1. Said differently, if you start the day at S1 and head up, looking for R1. They're all the same pivot ratios, all right? And they basically just give us the relative targets for that day. Now, the whole crux of pivot points is, as long as you haven't hit our reversal zones, when you are above the daily central or weekly central, you look for reasons to buy. When you are below, you look for reasons to sell. So if we go back here, you know, we'll just zoom out here. Take the scroll off. Right. So above our central pivot, retest it, price heads up to the reversal pivots. Comes off the reversal pivots, breaks below the central, comes down, hits the reversal pivots, retests the central pivot, pushes down, breaks above it, heads to the reversal pivots, pushes down, retests the central, now we're below it, so you're looking for reasons to sell, breaks above it, retests it as support, looking for reasons to buy. Alright, retest the central, look for reasons to buy, oh, breaks below it, retest the central, look for reasons to sell. Now, these are important levels when you look at this in conjunction with the Fibonacci and, you know, sort of price action levels that we talked about yesterday. All right. Now, the next question that really needs answering then is, those are daily pivots. These are weekly pivots. So these are pivots based on the previous week's range, and the ones I showed you before were the previous day's range. Now, just like we talked about the fractals yesterday, notice how here we retested our central, You're going to breach these levels a little bit, but notice how the reversal zones were the bottom of the market every time. And then how the central, you know, when we were above it, price rose nicely. When we broke below it, you know, we've basically been trending to the downside and retested this weekly level. Okay? Now, where I find pivots very helpful is, you know, let's assume that on a daily basis, or rather daily pivot-wise, we above our central pivot. However, for the weekly, we below the weekly central pivot. So now we have a situation where on a daily pivot basis, we're bullish, but on a weekly pivot basis, we're bearish. So let's say we start our day retesting the central pivot. Chances are we're going to want to head up to around about M4, R2 here on the daily pivot. However, that would hypothetically take us to maybe a level of resistance, i.e. the central pivot on the weekly. That then could be a weekly central pivot, daily reversal pivot setup, and then we're looking to trade this down off the weekly central down to weekly R2, which could prospectively be an R2 on the daily, which is also your weekly central. So you can play the daily pivots relative to the weekly pivots. So just like our Fibonacci lesson yesterday and our price action lesson previously, pivots are also 100% fractal. And interpreting the pivots on a day in and day out basis is going to really help you identify some key levels to look out for. So what we're going to do in coming weeks is, these are just the rudimentary basics of pivot point use. So what we're going to do in the forthcoming weeks is we're going to take these different pivot levels, pivot points, and we're going to take our fibs, and tomorrow we're going to talk about just visual spin resistance, And then we're going to start tying all this stuff together in terms of refining buy and sell zones, refining when something is a spot trade setup versus a swing trade setup, defining that, and that'll obviously dictate the money management and how we manage risk and relative confirmation per trade. All right, so there's your pivot points. Hope you enjoyed yourself. My name's David Pegler. Always, if you like what's going on here, please thumbs up the video or post a comment below on the YouTube channel, or you can follow me at Forex David on the Twit. Talk to you soon. Thanks.